Hi, this is Web3 Talks, the podcast where we learn how to build Web3 projects directly from Web3 founders. My name is Maciej Budkowski and I talk with the founders about their projects, business models, technology, community building, user acquisition strategies, and more. If you want to start your own project or are just curious about the space, this podcast will bring you answers. Stay tuned. Before we start the episode, I'd like to say two things. First of all, if you like this podcast, please leave a 5-star review on Apple Podcasts or whatever service you use. It will help us to reach more people and get more great guests on board. Second thing, if you would like to read or discuss good Web3 content, or maybe you have some suggestions for the podcast, you can join our Web3 Talks Discord channel. You can find the link at twitter.com/Web3Talks, and there's a pinned tweet with the link to the Discord channel. So see you there, and now let's start the episode. Today's guest is Gil Hildebrand, founder of Gilded, a product that helps companies to receive payments in crypto, pay people in crypto, and do crypto financial reporting. So, hello, Gil. How are you doing?
Hey, I'm great. Thank you so much for having me on the show.
So, before we get to behind the scenes of your company, I will start with the traditional question, which is how have you ended up here, in this crazy Web3/crypto space?
I was a software developer for 20 years, and it really started when I was in high school. Instead of having a job delivering pizzas or something like that, I knew that I wanted to be a software developer, and that was in the late 90s. So, I saw the internet really start to develop. And since then, I've had, many different entrepreneurial ventures, but I spent about half of my career working on a previous company called Squidoo, which was this social publishing platform where we paid back half of the money that we made to the people that created the content on our platform. This was not Web3. This was started in 2005. And the tools for paying people all over the world were non-existent. So it was very challenging and it stuck with me. And I just knew I had to find a better way to handle that. And I didn't have a solution before that company was acquired. But then many years later, I discovered crypto and was immediately all in. And I thought for a month that I could be a trader. And I realized that I have no clue what I'm doing. But I do know what I'm doing when it comes to business and to software. And so that is where I started. From there, I had those challenges around getting people paid all over the world. I saw a chart one day that showed that the growth in the adoption of crypto is actually tracking the growth rate of the internet, and was like, wow, every business had to get an email address and a website. They're going to have to get a crypto wallet. And once they do, what happens then? And if they start having some success in Web3, then it becomes an operational challenge, a nightmare, because things don't work. The tools that you used in the past don't work anymore. And that's the perspective behind Gilded.
Yeah, so I have, one question, one comment on that. The first question is, hasn't this company been founded by Seth Godin? Because I somehow, relate his character to the name of the company. I'm not sure if I recall it properly.
Yes, Squidoo was founded by Seth Godin. I was the chief engineer or CTO, co-founder, and worked side by side with him for many, many years.
Oh, working with this kind of marketing whiz might have been interesting, I guess.
It was fascinating. He's a really sharp guy, learned a lot from him. And it was a good journey that we went on together.
My second thing that I wanted to say, and just transition to the next question, is, you are solving this very boring and very ugly problem. And I really like companies like that, for example, Stripe is a company like that. They solve such a boring and ugly problem that no one cares, but everyone wants it to work properly. So I think Gilded is somehow like that. Like it's very important part of the financial ecosystem, but very often it's easy to not even notice this kind of companies because they are somewhere in the background.
Yeah.
So
Yes.
I would like to ask you, about the story and the vision behind Gilded. Like, how have you founded it and what do you want to achieve?
Well, I started working on some initial ideas for Gilded as more of a payments focused product. And I took that to an Ethereum meetup that was being held in New Orleans, where I'm from. And I ended up recruiting several of the people from the meetup to work on this together. So it was a true, crypto community story. And at some point soon after that, there was a person who joined our team who was a CPA, an accountant.
Mm-hmm.
And he helped us to realize that, payments are great, but actually for a business, financial reporting is way more important. Like that's the most important thing. If you don't know what your numbers are, what you're spending money on, where you're making money, then you can't make important business decisions. And so at that point, we realized that this was more than about payments. This was about the entire back office of a business. Or now things have evolved to where we can't even necessarily say that everything in Web3 is a business, right? It can be a DAO, it can be some sort of organization, but you still need that financial reporting. One of the most interesting things about this new technology, and this is in some ways a very boring thing, but to me it's so exciting, is that let's say that you want to invest in a public company on the stock market. You can see that once a year, their financial records are audited and made sure that they're accurate. And then quarterly, they'll post, earnings updates.
Mm-hmm.
But with crypto, everything is transparent. It's real time. It's right now. And in theory, all of those financial records could be public. They could be audited in real time, not once a year, not once a quarter. What is the challenge with that? Etherscan. It's a great tool. I use Etherscan all day long. But the problem is that tools like that, block explorers, are not built with a financial reporting context in mind. Not only are you missing, data that looks like accounting type of data, but on top of that, you're missing the context of why did this transaction occur? What is it for? And so to the extent that Gilded solves problems around payments, it's primarily to understand why transactions are occurring. And then from there, we're building the backbone of the financial infrastructure that one day, we're not there yet, but we're getting there. One day we'll be able to fulfill this promise of like real-time financial reporting, dashboards of your DAOs, your public activity in a way that gives investors data that they can trust, data that's current, and that is a whole new world of transparency that we didn't have before.
Yeah, so like no more Enrons, basically.
No, no more Enrons. You may still have your rug pulls in crypto, but here's the thing: if product or if organizations, startups, DAOs care enough, if they want to be seen as legitimate in the future, they will have to have these things set up.
Yeah.
And so today, we've just got block explorer links and treasury wallets and stuff like that. But as time goes on, I think things will mature to the point where there will be like these trust workflows. And part of that will be visibility into the finances. Part of it will be who has access to what. And so while what we're doing is very boring, I find it very exciting because I think if we solve some of those challenges, then all the other great things about this new technology can actually, benefit the entire world instead of it being looked at as speculative and rug pulls and all those sorts of things.
Yeah. So you are the first startup in this podcast, as far as I know, that's operating mainly in B2B space. And businesses are generally not that open to like new ideas, especially ideas that are considered shady, because crypto for many years and still by many people is considered shady. So I'm wondering, like, how have you acquired your first clients? What have you done to get them?
I can start by telling you things that we tried that didn't work. To me, that's interesting. And then I'll tell you the boring way that we acquire customers today. So we started Gilded, we really started working on it in 2019. And that was like the height of the bear market in crypto. And there were a lot of questions, what is the market size of what we're working on? Of course, we saw the future importance of it, but is there enough of this today? And so we were open to experimenting with many different ideas. One of those we said was, let's go create the ultimate cross-border payment solution that uses crypto underneath, but you don't actually know that it uses it. And it's funny how the narratives in crypto change over time. Like at once it was like digital gold, and then it was cross-border payments and DeFi, and there was all these different narratives that have happened over time. Well, in that phase, we decided we're going to go after the payments market. It turns out that crypto can be a lot faster and cheaper than other payment methods, but it really depends on the situation. And also, the technology back in 2019 was not where it is today, and it's not where it needs to be in order for something like that to really make sense. But the most important reason why that failed was that we realized as soon as we position ourselves as a cross-border payments company, we compete with everyone else in the payments world who have billions of dollars of capital to throw at this problem. And it was at that point, I think sometime in maybe the fall of 2019, when we said, this strategy isn't working as well as we thought it would. Let's actually go in the other direction and say, if you're using crypto and you have challenges around the operations side of things, whether that be payments or financial reporting, then we are your solution. And that was a pivotal moment in our company's history where we actually realized that we needed to lean into crypto. And so very importantly, what we learned from that is we do not ever try and convince anyone that they should use crypto. They come to us when they've already made that decision and now they are having trouble scaling. So we don't focus on the lowest end of the market. We look for people or for businesses, I should say, that have real scale and real challenges that need to be solved. And the boring way that we go about acquiring customers is, putting out content, networking, going to conferences, all of the things that traditional SaaS companies might do. Now, so many things in crypto are an experiment. We felt that where we needed to experiment was on the market and somewhat on the technology side. But, in a startup, everything can be risky. So maybe we shouldn't experiment on everything.
Mm-hmm.
And the way that we did not experiment was we have a traditional marketing angle and we have a traditional business model, which is subscription based. That may change over time, but that's how we were thinking about, how do we build an actual company that's sustainable and then that can have an impact.
Mm-hmm. Yeah, the saying goes, fish where the fish are. So, basically, like, you
Right.
just went there where are your, like, potential clients without trying to now educate 5 billion people about crypto and fight with, like enormous amount of criticism that you might face. So I think it's pretty smart to go this way. I like the idea of not trying to innovate on everything because it's so easy to just get, messed up in all of that. Very often, like I see it nowadays when many people from Web2 worlds come to Web3, that many of their solutions work here as well. Like you obviously need to adjust. For example, messaging, maybe, you use some, WAGMI or whatever in your communication. But, it's like, it's still like the rules are more or less the same. You need to go where the clients are, educate them about your solution, and convince them that this solution might be the best one. And like, it hasn't changed because we have different technology. Like people are people. So yeah, I really like this way. And regarding not innovating, you are backed, as far as I know, by AICPA. And this is like a pretty like formal organization of
Hmm.
CPAs. So I'm wondering, like, how have you managed to get this kind of support for a project in a space that's like, as we said, like it's not that easy to understand for people?
Hmm.
Why they have, decided to support it?
Yes. Before I answer that, I just want to take a step back and share one more funny anecdote, which is that when I hire new people from Web 2, the biggest challenge that they have in Web 3 is my salespeople who want to pick up the phone and call prospects on the phone. And I'm like, in crypto, you cannot call people on the phone. They will think it's a scam.
Yeah, good luck with that.
um, you're going to be spending a lot of time on Zoom.
Yeah.
Anyway, about AICPA, for those who don't know, I think it's the American Institute of CPAs, or it may be I think there's an international version of it now, but there's like something like 650,000 members worldwide. And it is in the United States, the association that basically, cultivates accounting as a profession and also does the licensing for accountants and CPAs. So they have a startup accelerator where every year they pick a handful of promising startups that are creating technology solutions for accountants. And one thing that they are very aware of is that the role of accountants is changing. And they want it to change from, the idea of just performing the same calculations over and over to something where they can leverage technology for automation and turn their role into more like advisory. Like, how can I help you make money instead of just figuring out where your money is going? How can I protect you so that you can keep your money? That's what accountants really want to do. And so the AICPA wants to see technology solutions that enable accountants to spend more of their time doing that. Now, to your point about crypto being speculative or maybe even a scam or unsafe, the thing about what we do is we're the opposite of that. We bring that trust and clarity to the space in a way that's really needed. And so it really didn't take much convincing for the AICPA to decide that this is, blockchain and crypto are here to stay. And then it was just a matter of, okay, well, look into the market and who's innovating. And, we've been really doing this since 2019.
Okay, I guess it works. So I'm wondering, because you have over 2,000 clients, so this is quite a big client base. And I'm wondering, like, what has been the most effective tool? Because you mentioned a few, like, content marketing,
Mhm.
conferences. Do your like salespeople just DM people on Discord instead of, writing cold emails? Like, how is it different? Because we already spoke about it, but I'm wondering, like, what are these small things that are different from traditional SaaS, and what's the best way to reach people, at least for you, in this B2B crypto space?
Yeah. So just to clarify, the number that you have about 2,000 businesses. So those are the number of people who have signed up and use our free plan. I think there's over like 3,500 of those today. But in terms of actual paying customers, we have about 120.
Mm-hmm.
And in crypto, I think that shows that there is a real need for something like this. And that number has been growing quite a lot in the last few months. What we have seen is so much inbound interest in what we do that we actually don't have the time to do things like hop into Discord and DM, people. Where people are really stuck right now is there are no standards. There's no one who can come in and say, oh, I've done this 2 or 3 times before at previous companies and I know what I'm doing. They may be able to do that in the Web 2 world, but not Web 3. And anyone who has experience in this industry, they're not looking for a job because everyone's loving this space and it's in such demand that when you bring in new people, when you hire, they're going to be from Web 2. So those people, they're hungry for information. So if you put out information, just like Web3 Talks, like I think this is so needed. People need to understand what challenges and opportunities are out there, what people with their same type of role within an organization are doing. They need to feel like they're not alone. And so to the extent that, you can be a presence in the community and put information out there, people will come to you.
Do you do any community building, like, like Discord channel or like Slack or email list or whatever?
Yeah, we're part of someone on my team is part of like a crypto CPA. It's either a Discord or a Slack, I'm not sure. But I wouldn't say that there's a ton of that yet. I think that that's an opportunity that we should pursue. Like I said, I think people are just kind of hungry for information and to know that they're not alone. So that's an area where there definitely is some opportunity. One of the challenges about what we do is that it's a section of the market that people are naturally going to be a little bit more reluctant to share information, not about the way that they do things, but about what they're doing it on. For example, someone may not want to disclose exactly which crypto exchanges that they use if they're on a Discord talking to other people like them, because those things can be security risks. And so I think that's part of what makes it a little bit more difficult to share information specifically about like the finance and operations role in an organization in Web3.
Okay. And how does your tool really look like? Because that's one of the few that I haven't tried out, because I don't have a crypto, so many crypto transactions to really check it out. So I'm wondering, like, does it look like a traditional accounting software, but with this crypto twist, or, is it somehow different?
Yes. So the short answer to your question is that it will look familiar to accountants, because that is the goal. From there, I'll describe what our product does. So our core product connects to all of your crypto wallets. Typically, businesses have more than one, but they probably don't have 100. They might, but we'll connect to your crypto wallets. They could be on multiple blockchains or different exchanges. And we get all of that data into one place, but not only that, into the same format, in a format that's accounting ready. And that's actually really hard because, even for example, like if you take the differences between Bitcoin and Ethereum in terms of, how wallets are structured, and, Bitcoin has like the UTXO concept, whereas Ethereum is account based, and then you add in exchanges and they do all sorts of crazy things too. So it's very hard just to get all of that data into one accounting ready format. But we do, and then we give you superpowers. So if you are accepting payments in crypto, we have an invoicing solution that will enable you to send the invoice in your fiat currency and accept crypto for payment. We don't convert the crypto funds back and forth. We just help you accept it, mark the invoices as paid. If you are paying your team in crypto, we have mass pay, which enables you to pay 500 people at once in one transaction. So, if you've ever sent a crypto transaction before, it can be scary. So imagine if you had a team of 50 people and every month you had to pay 50 people individually in crypto. That's not fun. And so mass pay will just help you do all that at once. If you're dealing with NFTs, we have like a really robust NFT reporting solution specifically for marketplaces. And we're also right now building a portfolio tracker for funds that are holding NFTs. So all of these things are different add-ons to our core package. And you can kind of pick and choose what you need for your business or for your DAO.
Yeah, sounds cool, especially this payment. Like, whenever I do any crypto payment, I check it like 20 times. And like, I never thought about it before, but like paying 50 people every month and just checking whether the wallet is okay. And sounds horrible.
Yeah. We had one customer who they pay 250 employees in crypto every month, and they pay using a multi-sig wallet. So with a multi-sig, you have to have, let's say, at least like 3 people. So you do 2 of 3 signing, and they had to send 250 payments one by one with two people signing each transaction.
Oh God.
And do that 250 times every month.
Oh my God.
With us, it's just one transaction.
And how do you do it technically? Because this transaction needs to go like on blockchain. So how is it possible that you do it as one transaction? Does it go through some smart contract?
Yes, it goes through a smart contract. It's similar to the way that people do airdrops, where you can have one transaction and just drop to a bunch of people at once. What we do differently is that in our application, we're storing information about what that transaction was for. We help you calculate exchange rates so that if you decide to pay in your token, you can still list the amount in your fiat currency. So you can say, pay this person $1,000, but then it'll convert that to the current price of your token. We also send everyone email notifications so the recipients know when they got paid. Because if you think about having to send an email to 50 people, say, hey, check your crypto wallet, you got paid, even that takes a lot of time. So those are the values that we add on top of the smart contract that hopefully make it worth using.
It all sounds like a lot of very dirty technical work, that you need to get your hands dirty and solve this very complicated problems where small mistake can be very costly. So I'm wondering, what has been the biggest technological challenges so far for you, and how have you managed to cope with them?
I have two answers for that. And the one that's been the biggest technical challenge that I think we've overcome, it will always be a challenge, but I think we've found a way to deal with it, is that the data can come in many different formats. And so the way that you get crypto transaction data from Kraken is way different from Polygon, or which is way different from Algorand, or Solana. So we have a process in place where we can kind of create these different mappings from whatever blockchain or exchange we're talking about to the primitive concepts that we have in our application. And that way, when we want to add a new integration, we just build a new mapping. And that's really challenging. Like if you're not using Gilded or something like Gilded, then you've got a bunch of different spreadsheets and you have to do all that mapping and figuring that out. But you get to do it not just once, but every month, because businesses do accounting on a monthly basis usually, ideally even more than that. And that's one of the biggest things that I think when you are trying to understand how accounting is different for an individual versus a business is looking at their profit and loss and their balance sheet monthly. Whereas an individual, you just do your taxes once a year and that's it. And so that's much more demanding, and having to reformat that data all the time is a lot. So that's the challenge that I think we've figured out how to handle. Now, the one that we haven't is that crypto is experiencing a big bang. The technology is going in 1,000 different directions. And there's the idea of smart contracts potentially being able to take over any finance function within an organization. And not only that, but create entirely new ones. So this creates a really big challenge for accounting purposes, because let's say that you are a crypto investment fund and you've decided to participate in particular DeFi staking pool. And let's say that you deposit funds, like let's say Ethereum, from your wallet into this staking pool.
Mm-hmm.
From there, it may generate interest, and that interest could be given monthly, it could be daily, according to how the smart contract was developed. In some cases, we've seen that the token that you're paid in is not even the same token that you staked. So that becomes another challenge. Now, for a business, at the end of every month, you have that monthly close where you want to figure out, where was my total profit and loss for this month? Well, you may have tokens that are sitting in a smart contract and generating interest, but that interest hasn't been paid out yet. It's still theoretical based on what the contract said it was going to do. So that is a massive challenge, like figuring out how do we create an architecture that when someone's using this DeFi staking protocol, we can then create accounting statements for them that say what their actual holdings are. And can we do that in a way that works not just for one smart contract, but for every smart contract out there? And I don't have an answer for that. But the more that we see people dive into DeFi, the more that we see businesses do it, it is a nightmare. It's a nightmare even for us. I can't imagine the CPAs out there, the Web2 CPAs who, are asked to figure this out sometimes.
Yeah, someone just says, yeah, just, do my taxes. And you look at this and like, what the hell? I once had this joke about ENS airdrop. Like imagine you just go to, to this 60-year-old lady at the IRS and you say, yeah, because I was early adopter of this Ethereum name service and you can see token like in the Etherscan that I have it. So I had a domain there. And because they airdropped me some more tokens because they converted to DAO and like, what the hell? Like, there's no way that she's going to understand that. And yeah, sounds pretty complicated. But, talking about technical things, like I know that a big part of your development team is located in Albania, which is a pretty exotic location for most US startups. I guess many of US startups might not be even able to locate Albania on the map. Actually, I am only because I've been, just next to Albania a few times. But I'm wondering, like, why have you chosen this location, and what are the pros and cons of having a technical team that's far away, like many time zones away?
Yes. So first of all, Albania is like between Greece and Italy, basically. So although it sounds very exotic, once I looked at it on the map the first time, I realized, oh, this isn't too far away from places I've been before. But why Albania? So one of my co-founders, Aleti, and I were connected together on a previous project that we worked on. During the course of my career, have had many times where I've basically recruited software developers from all around the world. That's in addition to the payment related challenges that I had at Squidoo. But I've certainly felt like the internet made it easy to communicate and work with people all over the world, but that the financial system just didn't catch up. So to me, I always knew it would, and I grew up with the internet being around. To me, it's fine and even good to work with people in a totally different part of the world. You get a sense of cultures mixing, first of all. Second, from a purely operational perspective, it's nice that you can have people in two very different time zones. Like for us, it would be in the US and in Albania, that we can get things done as a company for more of the 24 hours of the day. So we were able to feel very intuitively the challenges around international payments and about the financial system not really working very well in a global context. Two, it's nice to have people in different time zones. And three, we were just connected. Aleti and I were connected together on a previous project. We loved working with each other. And as Gilded's grown, we hire people in the US, we hire people in Albania whenever we find someone good. And so we're, basically just keeping that open. We're a Web3 company. So location means nothing.
Yeah. Apart from like tech team location, you had also pretty unorthodox way of funding your business because you use a token, but not like a traditional token. Your token converts to shares on an exit event, as far as I understand. So could you tell us a little bit about this model and why have you chosen this way?
Yes. So first of all, we've done a mix of traditional venture capital as well as this token model. The token model is something really interesting that we found when a startup is early in its process of finding product market fit and things like that. It can be difficult to value the company before there are real revenues in the door. And so in Silicon Valley, what they've come up with is this concept of a SAFE, which is a simple agreement for future equity. And it basically says, I'm going to give you a certain amount of money, and then we're just going to agree that when more professional investors come in at a later date, that I'll get a percentage of the company based on what I put in. And that model works fairly well at first. But then the challenge becomes, as an entrepreneur, that the more of these that you raise from usually individuals as investors, then it becomes difficult to know exactly how much of the company that you're giving up. And so what attracted me to this model, which was created by a company called Fair Mint, and it was originally called the CAFE, the Continuous Agreement for Future Equity. Now it's called the Rolling Safe. They've changed the name. But for us, it was the CAFE. And the idea there is carve out a specific percentage of the company's equity for this one pool of people. And from there, create a valuation that automatically increases with each new investment. And this is something that people sometimes do with safes anyway, where they'll say each new safe is at a higher valuation cap. But what the CAFE or the rolling safe model does is actually automatically increase the valuation for each investment. And that means there's an incentive for the early investors to come in first. So what they did was they took blockchain principles, but also blockchain technology to do this. The algorithm that's used for determining the valuation is based on a bonding curve, just like in AMM. The percentage of the company's equity is you pick a certain percentage. So we're selling 10% of the company to people who buy these tokens. And the way it does convert, as you said, is that when the company is sold or goes public, that 10% is given to all of the token holders based on what percentage of the tokens that they earn. So it's a nice streamlined way to offer something like that, where we can always accept new money. Like someone can log in and send an investment. They can do it in USDC, or they can do it using a bank transfer. And it just creates a nice streamlined way for people to get access to Gilded. It's something that's easy for us to offer.
So because these tokens are converted only at the, during the exit event, that's why they are not considered a security, right? Or are they security?
Yes, they're considered a security. They're governed in the United States under Reg D, which is, a law around fundraising and how you can market an investment offering publicly. We are doing that within the US only to accredited investors because it is a security. But internationally, it's governed under Reg S, which enables us to basically accept investment from anyone as long as they're not on a sanctions list or otherwise on a AML list.
Okay, got it. So, we are getting till the end. We got pretty, we talked about technology, about equity, about acquiring clients. So we'll have 3 lighter questions at the end. Like they are the most traditional questions of this podcast. So the first one is, what has been the most mind-blowing Web3 project that you have seen? Something that, was either inspiring or very weird?
Well, there's been some amazing ones, like just the concept of generative art NFTs is fascinating. I also love the idea of the game Star Atlas, which I unfortunately am too busy to actually dive into. But I love the idea of, like a space game where, hey, your ships in the game are represented as NFTs. And then as you go into deep space, the further you go, you can actually battle people. And if you lose the battle, you risk losing some of your NFTs. That to me is really fascinating because I think it's a nice play on or a nice way to advance the technology. But one that I really love is Pool Together. And I actually don't use Pool Together, but I think I may give it a try. But the lottery or the concept of a lottery has been something that's really a tax on poor people. And what I love about Pool Together is how it's innovating on financial services, where previously you would convince people to buy in the lottery because they don't see a path to ever being, financially stable. And so they're willing to go for that long shot. But with Pool Together, you can do that while also getting paid interest, way more than a traditional savings account. So I think it's that type of thing that people need to understand, like how this is going to innovate on financial services. It can be better than what the banks offer today. And that's just one example, but I love it because it's simple enough to understand and it's just a really cool concept.
Mm. Oh yeah, like it's for me it was also one of these mind-bending projects that I've seen. So for people who don't know Pull Together, like it's like reverse lottery. I mean, in this way that you save money and you can like win every week, like the interest that has been staked during the time that you have saved it. So like in lottery, you just give your money and you never see it back unless you win. But here you just either save your money or win money. So it's like win-win.
Who wouldn't want to play that game?
Yeah, like so I have the other question, like what has been the funniest thing that happened to you? Something that made you smile or laugh in the last few years?
Yeah, this would have to be when we were in Techstars, which is a startup accelerator. Early in the program, we had to meet with 100 different high-level business people and advisors, and this was up in New York, that were involved in crypto in the early days or involved in financial services and those sorts of things. And so your head's spinning from meeting so many people and then, giving you advice on what you should do with your company. And there was one guy who is kind of an OG in blockchain, and he looked at us and said, yeah, I mean, in 5 years, you guys will, be on top of the world and every company will need you. And we just laughed because we were so early in our journey. We were like, we just quit our jobs, to to get involved in this new venture. And we felt like 5 years was like an eternity. And an eternity in crypto is honestly like a week, right? With how much that happens. So it was funny that he said that because it was just, it seemed like, of course it's that obvious, but that's so far away. But this guy was such a crypto OG that, he's been in it for 5 years at that point. And so he saw that time would go by. And I think in that way, he was like an early believer in what we were doing. And today, I mean, that, clearly he was right about that. But just to hear it so early in the game was shocking to us in a way.
And are you still in touch with this guy?
No, I have not talked to him since then, but I'm sure that he'd be, maybe I'll see him at a conference or something. I'm sure he'd be pleased to see that he was right.
Yeah. Okay. So I have, last question, like this is also traditional question. I'm wondering, do you know any builders, people like you who run businesses in Web3 space who might be a good fit for a conversation like, the one that we had? Any ideas for other possible guests?
Oh, yes. I have a couple ideas, because we are working with builders of many different companies in the crypto space as customers, and sometimes we're customers of theirs. So I can think of some specific names and maybe connect you over email, but other builders and people who are kind of operating in the back end of some of the companies you may have heard about.
Okay, great. So Gil, thank you for your time. It was very interesting, even despite the fact that it's related to finance, that most people think, well, finance, accounting, they feel it's just a pain in the ass. But
right.
I can really hear that you are very, fascinated by solving this very, very hard problem. And I'm very happy that we had a talk and see you somewhere on a conference or, on Twitter.
Yep. It's been great connecting with you too. Love talking about this stuff. Love meeting other builders too. So happy to connect on LinkedIn or Twitter.
Okay. See you, Gil. Have a good day.
Okay. Cheers. Bye.